Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just want to do a little disclaimer. Nothing said should be construed as financial investment advice. Just my opinions and thoughts. And let's get into the stuff. Yesterday I had Valentine's Day night with my wife. Good dinner and everything, so fun stuff. So that's why I didn't do a video yesterday. Let's get into one today, though. Wanted to go over, if you look at it. Oh, I didn't have this. Let's do previous week. Let's go to the Monday. The big news, the retail sales down 9%. That was really big. The consensus was only supposed to be dropped 1%. Now, if you're watching this and you're like, well, of course it went down. Um, that all that spending from Christmas, but these are seasonally adjusted. So they adjust that seasonality. But what I will say is last year around this time it declined. So I don't know, but this is a big, big decline. 9%, close to it. Um, and then you take away autos, 4%. You can tell the big ticket items like automobiles, people aren't buying. And they have all those after holiday sales and everything, but year over year it's up 4.2%. Industrial capacity and everything. But this is one thing that I found interesting. This really spooked the markets. And, I've been telling you on this channel, like, technology is basically a subsidized government industry. It's not really real. It's not something that makes our lives better or whatnot. And the funny thing is, you can tell by the market reaction to the days. Now, it went up and down, it seesawed. But if you look at Dow Jones, that was down 165 points. Uh, S&P, that was down, that was flat, so not too much. And I think one of the reasons the markets definitely didn't tank. Look at this, Dow's down 165, S&P down 0.44 is, if you look at the 10-year, I want to see where the 10-year is. All right, I'm just going to do interest rates. And this is the one thing about market sentiment that it's been going on for a while, I think eventually, but this is why I think the market didn't do poorly is that look at the 10-year interest rates. It's down 1%. Now it's up 4%. I think look at it here. Look at it here. Look at the 1990s. And then around 2020, it started to go up. I think this will eventually catch up. But the reason why there hasn't been a serious market decline is when interest rates, look at this, 0.68. It's not even a percent. So a lot of companies locked in longer term interest rates on a long basis. And that's why there hasn't really been too much of a market correction. Because you can see this is where '03 interest rates started really rising. 2001, that was the tech bubble. And 2007, that was a reaction. But yeah, I think that's why you haven't seen the markets even gone up with it. Because what happens is all their cash on their balance sheets starting to yield a return. So earnings are going up. Plus, all their costs associated with interest, meaning most of the companies, they are fixed. So it didn't really, a lot of them weren't variable. So that's why. And eventually they're going to have to refi. But yeah, if you look at it, tech, well, I mean, when your customer is the government, they can borrow unlimited, then yeah, you don't need it. So look at GLD. Gold really took a beating, and I still think it's all the way up till 3,000. If you actually look at it, it was up and then just went. It got a little buying down here, but I think it's been going up a lot. Let's see, what is the price? I don't have to go to Kitco because it will have the closing price. What is the price right now? I just go to GLD if it is your first time listening. I just go to GLD. It was like during the week, it won't. But yeah, well above 2,800, close to 29. I'm not surprised that things don't go up in a straight line. One day doesn't make us trend. So this is an article here. Oh shoot, let me stop my screen share real quick. Let's see, retail sales. I want to just get this so I can get. And so now I'm gonna go back to sharing. And then I didn't want to go in my email list. But yeah, I was looking at this article Yahoo, and the thing to really point out, first I just want to always do headline, and you can tell way more than the expected decline. And this was the largest since January of 2024. So take it for what it's worth. But here's the thing. Sales in December were revised up from the prior reading. So that was one this reminds me, they nasty winter and they think it's the holiday hangover and the nasty winter, which could be. But here it is, 2025. If you look at it, this was January of 2024, which is actually worse, but then strong February, strong March. Then it went down and then so it had a nasty January last year, so we'll see where this goes. But I always said we're going to get hot inflation or bad data, but this could be. But let me go through. This is the one thing I wanted to get to is that this shows how spooked they are. If February and March data are this week, then we might see a negative print for GDP. I do think we'll see a recession this year or next. They said this is not our base case, but something shy of 2%. So obviously GDP is looking to uh go down. If you look at it though, I wouldn't be surprised because Mag 7, they haven't been doing well. A lot of the tech, their earnings haven't been doing well. Now the stocks seem not to care. So this retail sales has some but also inflation. And this is one reason I think people will cut back is look, coffee is in a perfect price storm starting to hit wallet. So a lot of people that are big coffee drinkers, look at this. Coffee futures have ripped more than 30% year to date, hovering near all-time highs. So if you look at it, look at coffee year to date. It's just you can't blame this on the tariffs. Look at that 1 year basis, really up. 5 year basis, look, it was like look at it. If you look at it, 2022, it started going down, but in fall of 20, now it's just ripped, and it looks like a new high. Look at this, and this is why I said, look, they're going to try to blame the tariffs, but here it is. One global buyer and seller told Wall has yet to raise prices, has no choice but to consider hiking. So they do want to blame it on the weather, but I don't. If it was just temporary weather, why raise the prices? Aren't they going to come back down? Look at this. Other companies considering price hikes as well. So, Starbucks says their hedging strategy makes prices, but I mean, it's only Starbucks. So, but yeah, coffee, this will eventually get passed on. So, coffee, get your coffee while you can. So, the other things I was looking at, housing market update. We talk about the housing bubble that's here. More Americans with government loans are falling behind. And you've heard of trickle down economics, which is debated where it's work. I don't really believe in it, but you can believe in it yourself. Uh, but borrowers who got home loans through government-backed programs are increasingly falling behind on their payments, potentially worrying sign for low-income Americans. Well, people behind this are wealthy, so eventually it's going to start. There is something called trickle-up poverty, and if you don't believe me, look at '08. What caused it? Subprime. Subprime was the first domino to fall. Subprimes were people with bad credit, people that were lower income people, and that poverty trickled up. And delinquency rates on Federal Housing Administration and Veterans Affairs loans reached 11% and 4.7%, reaching pre-pandemic levels. So, so look at this. Conventional mortgage delinquencies are creeping up too, but more slowly at 6.2%. They are below the pre-pandemic levels and near lows, but they're coming up. And yeah, this is like '08 in the subprime. It's going to be trickle up poverty. So even though it's bifurcated right now, the conventional, they're starting to feel it now. And the other thing is a lot of these people, the next wave of inflation is going to hit them. So, and remember, now the federal government's getting laid off. Private sector, we've covered it. They're laying people off. So eventually, some of these people, they're going to have to sell their houses. Especially, let's say you have 80,000 home equity. Some people might take out a home equity loan, but some people might just say, screw this, I'm going to sell my house or my apartment and go home with my parents or move in with somebody else while we can look at this gradual rise in delinquencies all on the way. So, anyways, you can see that the subprime part is starting to crack. So, and I just wanted to point out this is a Doge article, and this is the thing in terms of what they're doing. I don't really care. You can think what you want about these. I don't really care about these. Regarding to the market, what's being cut? Government buildings. And these are leases under review that they're going to cancel. Well, a lot of these are commercial real estate. So this type of selling is going to push the commercial real estate market even down more. And even though they haven't thought about this will hurt the commercial real estate market. So let's get rid of that. And the last thing I wanted to get into today, talking about this reminds me of silver when they used to say, a 5 ounce bar will buy you a house. Bitcoin will be unaffordable, predicts a 5 million price. Now we're having Michael Saylor saying that Bitcoin is gonna be 5 million. Let's see if he has any time target. But these are the types. He borrowed a lot of money. And look at this. Gold is broken and Bitcoin's going to replace gold. So, and look at this. Three catalysts that could send Bitcoin. Bitcoin will be unaffordable. Speaking of Bitcoin, GameStop is going to be buying crypto and all that other stuff. So this has bubble sort of tulip mania behavior written all over it. So, but that's what happens. Markets die, they end. Bull markets, you remember this, bull markets are the authors of bear markets, and bear markets are the authors of bull markets. So anyway, that's all I have. Hit that like button, subscribe, talk about it. I'll see if I can do a video tomorrow or Monday or both. So just remember the disclaimer and thank you for watching and watch all the way through. I will see you next video.